Welcome to L-Impact Solutions. Today, we're diving deep into the financial world with our exciting topic, 2025 Money Secrets Revealed. Stop this financial mistake and 10x your growth. Are you ready to unlock the keys to financial success? We're here to help you discover the hidden pitfalls that are holding you back and learn actionable strategies to propel your wealth to new heights. In this live session, we'll cover the biggest financial mistakes people make in 2025 and how to avoid them. Proven techniques to 10x your growth in the coming year. A live Q&A session where you can get your burning financial questions answered. So, grab your notepad and get ready to take notes, because this is going to be a game-changing hour. Let's get started. What is the one thing Americans need to stop doing with their money in 2025? In 2025, one crucial habit Americans need to stop is overspending, especially on non-essential items and services. The trend of living beyond one's means has been exacerbated by the convenience of credit cards and online shopping, leading consumers to make impulsive purchases that ultimately strain their finances. The consequences of overspending can be severe, resulting in high debt, anxiety from financial instability, and difficulties in saving for emergencies or future investments. To combat this habit, individuals should focus on budgeting and creating a spending plan that aligns with their income and financial goals. Tracking daily expenses can help identify areas where unnecessary spending occurs. Additionally, adopting a mindful approach to purchasing by asking whether an item is a need or a want can significantly reduce impulse buying. Moreover, educating oneself about financial literacy, understanding concepts such as compound interest, investments, and debt management, can empower consumers to make informed decisions that benefit their long-term financial health. Setting specific savings goals, such as building an emergency fund or investing in retirement accounts, can provide motivation to prioritize saving over spending. Ultimately, shifting from a consumer mindset to one focused on financial stability will lead to healthier financial habits and a more secure future for many Americans in 2025. 2. Why was the Truth in Politics Group fined nearly $250,000? The Truth in Politics Group faced a fine of nearly $250,000 due to violations of campaign finance laws, which are designed to promote transparency and fairness in political fundraising and spending. One common issue that leads to such fines is the failure to disclose contributions accurately or on time. This can involve not reporting the sources of large donations or not properly categorizing expenditures, which can mislead voters about the financial backing behind political messages and campaigns. These violations are taken seriously by regulatory bodies, as they undermine the democratic process by obscuring the influences behind political campaigns. Transparency in political funding is essential for maintaining public trust and ensuring that voters are aware of who is backing candidates and policies. The fine serves as both punishment for the wrongdoing and a deterrent to other organizations that may consider circumventing campaign finance laws. This situation also highlights the increasing scrutiny on political financing in the United States. With growing awareness of the impact of money in politics, groups are urged to follow strict guidelines regarding funding sources, expenditure reporting, and overall compliance with state and federal regulations. It emphasizes the importance of adherence to legal standards to foster a fair electoral process, reinforcing democracy and protecting the integrity of political communication. 3. What advice is given to make 2025 a better financial year? To ensure a better financial year in 2025, a multifaceted approach is essential, combining practical strategies with a mindset shift towards financial responsibility. The first step is to create a comprehensive budget that accurately reflects income, expenses, and savings goals. This budget should be revisited regularly to account for any changes in financial circumstances, ensuring that expenditures remain in line within. In addition to budgeting, setting specific financial goals can provide direction and motivation. This could include saving for a major purchase, building an emergency fund, or investing for retirement. Utilizing tools such as savings apps or budgeting software can streamline this process and make tracking progress easier. Furthermore, it is crucial for individuals to prioritize paying down existing debts, especially high-interest credit card debts, as this can free up more resources in the long run and reduce financial stress. Investing in financial education is another vital piece of advice. Understanding different investment vehicles, the importance of compound interest, and the risks associated with borrowing can empower individuals to make informed financial decisions. It's also important to cultivate a savings habit, regardless of income level, Even small amounts can add up over time. Lastly, being open to adjusting spending habits, such as embracing frugality or searching for better deals, can lead to significant savings. By implementing these strategies, individuals can improve their financial outlook and set themselves up for greater success in 2025. Should investors consider buying SoFi Technologies stock while it's below $20? Investors looking at SoFi Technologies stock, especially when it's priced below $20, should consider several factors before making a decision. SoFi, which operates as a financial technology platform offering loans, investment, insurance, and banking services, has shown significant growth in recent years driven by the increasing adoption of digital financial services. One of the key points to analyze is SoFi's business model, which has diversified revenue streams compared to traditional banks. Investors must look at SoFi's earnings reports and market performance. If recent reports indicate strong user growth and increasing revenues, it could signal a positive trajectory. Moreover, the company has secured various partnerships and expanded its product offerings, which may enhance its competitive position in the fintech sector. Price below $20 may also offer a potential entry point relative to its intrinsic value, especially if analysts predict long-term growth driven by digital banking trends. However, it's essential to weigh this against risks such as the volatility typical in the fintech sector and the overall market conditions. Ultimately, potential investors should conduct a thorough analysis, including reviewing SoFi's competitive landscape, growth prospects, and their ability to withstand economic fluctuations. Consulting financial advisors and examining personal risk tolerance is always advisable before making investment decisions. 2. What is the VA benefits payment schedule for January 2025? The VA benefits payment schedule for January 2025 is set in accordance with the traditional distribution timeline established by the Department of Veterans Affairs. Veterans and eligible beneficiaries can expect their monthly benefits to be deposited on the first of the month. However, if the first day falls on a weekend or holiday, payments may be issued on the preceding business day. For January 2025, since January 1st falls on a Wednesday, veterans can anticipate their payments to be deposited directly into their bank accounts on this date. This consistency in the payment schedule is crucial for many veterans and their families, as it helps them plan their monthly budgets and manage financial commitments effectively. Veterans can receive a variety of benefits, including disability compensation, educational assistance, pension, and more. Each type of benefit has specific eligibility criteria and documentation requirements. To ensure timely receipt of their benefits, veterans should keep their contact information updated with the VA and regularly check their online accounts for any notifications regarding their benefits. Additionally, veterans can access information about their payments, including past and upcoming disbursements, through the VA website or by contacting VA customer service. Staying informed about the payment schedule and any potential changes is essential for veterans to manage their finances responsibly. 3. What financial course is being offered for farmers and ranchers? Farmers and ranchers can enroll in an online financial and farm management course designed specifically to equip them with the tools necessary for effective financial decision-making and operational efficiency. This course addresses the unique financial challenges faced by those in the agricultural sector, providing participants with comprehensive training in managing agricultural finances. The curriculum typically covers vital topics such as budgeting, cash flow management, understanding financial statements, and strategic planning. These subjects are crucial for farmers and ranchers, as they must make informed decisions in a fluctuating market influenced by weather conditions, commodity prices, and policy changes. In addition, discussions on risk management practices, such as insurance options, financial forecasting, and investment strategies are often integrated into the coursework. The course also emphasizes practical application, encouraging participants to develop personalized financial plans based on their specific circumstances. Interactive components, such as case studies and peer discussions, facilitate networking opportunities among participants, allowing them to share experiences and best practices. By completing this course, farmers and ranchers can enhance their financial literacy, enabling them to improve profitability and sustainability on their farms. The knowledge gained can lead to better financial outcomes and empower them to navigate complex agricultural markets with greater confidence. Which cryptocurrency is suggested for potential 10x growth? Analysts are currently highlighting several crypto assets that may offer substantial growth potential, particularly those that have garnered significant attention in recent months. One of the standout candidates is Pepe Coin, Pepe, which was initially developed as a meme-based cryptocurrency but has recently captured the interest of investors looking for the next big opportunity in the crypto market. Analysts believe that the revival of meme coins and their growing adoption for various use cases might provide a fertile ground for substantial price increases. Another cryptocurrency that is frequently mentioned for its potential to achieve a 10x growth is Polygon Matic. Polygon has positioned itself well within the Ethereum ecosystem, offering solutions like Layer 2 scaling to improve transaction speeds and reduce costs. Its partnership with major platforms and ongoing improvements in scalability further boost its prospects. Investors are generally advised to conduct thorough research before committing funds, as the cryptocurrency market is notoriously volatile. Understanding the technical aspects, the team's credibility behind the projects, market trends, and community support can all play crucial roles in determining the likelihood of such price movements. Additionally, diversifying investments and not putting all funds into a single asset could help mitigate risks associated with the unpredictable nature of cryptocurrencies. What financial surplus did GCC countries report for 2022 and 2023? The Gulf Cooperation Council, GCC, countries, which include Saudi Arabia, the United Arab Emirates, Qatar, Kuwait, Oman, and Bahrain, reported a significant financial surplus during 2022 and projected similar trends for 2023. This financial surplus can largely be attributed to rising oil prices, as the region is heavily dependent on oil exports for its economic stability. In 2022, several estimates indicated that the GCC collectively recorded a surplus approaching $100 billion, a remarkable turnaround following years of budget deficits caused by lower oil prices during the oil price slump in 2014 to 2016. The financial windfall enabled GCC governments to increase spending on key sectors such as infrastructure, health, and education, driving economic diversification initiatives outlined in various national visions, like Saudi Vision 2030. Moreover, higher-than-expected revenue from oil exports empowered these nations to bolster their economic resilience amid global economic uncertainties. Looking into 2023, analysts predict that while oil prices may stabilize, the continued investment in non-oil sectors, alongside strategic initiatives for economic diversification, will likely keep the GCC countries in a surplus position. Moreover, sustained growth in tourism and financial services within the region also contributes to a more balanced economic future for the GCC, reducing dependence solely on oil revenues. What is a common New Year's resolution related to finances? A prevalent New Year's resolution related to finances is to improve budgeting and personal finance management. As the year turns, many individuals reflect on their financial habits over the past year and recognize the need for changes that can lead to better financial health. This could involve setting clear financial goals, tracking spending habits, or creating a more structured budget to curb unnecessary expenses. Implementing a budget often empowers individuals to take control of their finances, helping them allocate funds toward savings, investments, or paying off debts. Many resolve to save a specific percentage of their income each month or establish an emergency fund to cover unforeseen costs. This resolution is frequently accompanied by the aim to reduce credit card debt, which can be a significant burden for many, thus contributing to an overall sense of financial stress. Additionally, individuals might consider resolutions that involve increasing their financial literacy, such as reading books on personal finance or taking online courses to understand investments better. This proactive approach not only enhances knowledge but also builds confidence in managing finances. Ultimately, these resolutions reflect a desire for security and stability, aiming to set a foundation for long-term financial health and peace of mind in the coming year. What challenges do Latino entrepreneurs face despite progress in credit access? Despite some progress in credit access, Latino entrepreneurs still face significant challenges that can hinder their business growth and success. One of the primary issues is the persistent funding gap. While Latino business owners have improved their access to certain financial resources, they often still receive less funding compared to their white counterparts. This disparity in funding can be attributed to a range of factors, including systemic biases within lending institutions and a lack of familiarity with financial products, which can discourage Latino entrepreneurs from pursuing loans. Additionally, many Latino entrepreneurs operate in industries with lower capital requirements, which may lead to less visibility and recognition from investors seeking higher margin opportunities. Language barriers also play a crucial role, Many Latino entrepreneurs may not fully understand financial jargon or the intricacies of loan agreements, making it difficult for them to navigate the financing landscape effectively. Moreover, networking opportunities, which are essential for entrepreneurial growth, are often limited for Latino business owners. They may lack access to mentorship, business networks, or resources that can facilitate connections with potential investors or clients. This lack of support can significantly impact their ability to scale their businesses. Overall, while there has been progress, Latino entrepreneurs continue to face a combination of financial, systemic, and social challenges that hinder their overall growth and success. 2. What is the long-term outlook for Visa stock according to analysts? The long-term outlook for Visa stock is generally positive among analysts, reflecting the company's strong market position within the payments industry. Visa is a global leader in digital payments, benefiting from the increasing trend toward cashless transactions and the shift to e-commerce. Analysts highlight that the continuing adoption of digital payment solutions, both in person and online, will sustain Visa's growth trajectory over the coming years. Several factors contribute to this optimistic outlook. Firstly, Visa has maintained a robust business model, characterized by high margins and significant cash flow generation. The company's ongoing investments in technology and innovation, such as contactless payments and cryptocurrency-related services, position it well to meet evolving consumer preferences. Furthermore, Visa's partnerships with various financial institutions and merchants help expand its market reach and enhance its value proposition. Another aspect influencing the positive outlook is Visa's commitment to expanding its global presence. With growing demand for digital payment solutions in emerging markets, analysts anticipate that Visa will capitalize on these opportunities to drive revenue growth. However, potential risks remain, including regulatory scrutiny and increasing competition from fintech companies. Nevertheless, the consensus among analysts is that Visa is well equipped to navigate these challenges due to its strong brand, technological capabilities, and extensive global network, reinforcing its long-term growth prospects. 3. What price prediction is made for Stellar XLM by 2025? Analysts have made a bullish price prediction for Stellar XLM, forecasting that it could reach approximately $1 by 2025. This optimism is largely driven by the growing adoption of blockchain technology and Stellar's unique positioning within the digital financial ecosystem. Stellar aims to facilitate cross-border payments, specifically targeting the unbanked and underbanked populations worldwide. As financial institutions increasingly recognize the potential of blockchain technology to streamline transactions and reduce costs, Stellar's solutions could see heightened demand. Several key factors underpin this price prediction. First, Stellar's partnerships with major organizations, including MoneyGram, enhance its credibility and expand its use cases. Such collaborations are likely to increase transaction volumes on the Stellar network, contributing to overall growth. Additionally, the platform's focus on providing low-cost financial services aligns well with the increasing global emphasis on financial inclusion. Moreover, as the cryptocurrency market matures and regulatory clarity improves, more institutional investors may seek exposure to promising digital assets like XLM. This influx of investment could drive up demand and, consequently, the price. However, it is important to note that cryptocurrency markets are highly volatile, and predictions can vary widely among analysts. Investors should remain cautious and conduct thorough research before making investment decisions. Overall, the outlook for Stellar XLM appears promising, with the potential for significant gains by 2025. How much financial help did Springfield receive for the Jordan Creek project? Springfield received $10 million in financial assistance from the Missouri Department of Natural Resources, DNR, for the Jordan Creek project. This funding is part of a broader commitment to enhance water quality, improve the landscape, and reduce flooding in the area. The Jordan Creek project is significant for Springfield as it addresses critical environmental issues while also enhancing community amenities. The financial help will be utilized for various aspects of the project, including stream restoration, floodplain management, and the development of related public spaces. The project underscores the importance of infrastructure development that prioritizes sustainability and resilience against climate change impacts. The funding from the DNR demonstrates the state's recognition of the need for improved water management systems, particularly in urban environments where increased impervious surfaces lead to greater runoff and pollution. With the allocated funds, Springfield aims not only to manage environmental challenges, but also to foster community engagement through the creation of recreational areas that encourage outdoor activities. By improving the Jordan Creek area, Springfield seeks to revitalize this part of the city, which can lead to increased property values, greater public interest, and a boost in local business opportunities. Overall, this financial assistance represents a vital investment in Springfield's environmental future and quality of life, illustrating how governmental support can significantly impact local infrastructure projects. 2. What is the significance of the infrastructure stock mentioned in the news? The infrastructure stock mentioned in the news is highlighted as crucial for supporting a massive $3 trillion megatrend in the economy. As governments worldwide increase their focus on infrastructure development to foster economic recovery and growth, investments in infrastructure stocks become particularly attractive. This trend is driven by several factors, including the need for updating aging infrastructure, transitioning towards sustainable energy sources, and enhancing transportation systems. Investing in infrastructure stocks is perceived as a stable and potentially lucrative opportunity for investors. These stocks typically provide steady dividends and demonstrate resilience in economic downturns due to the essential nature of infrastructure. Companies involved in construction, engineering, utilities, and renewable energy are often at the forefront of this megatrend, making them attractive investment choices. Moreover, infrastructure spending is seen as a response to various challenges, including climate change and the demand for technological advancements. Infrastructure stocks might benefit from increased government spending and private investments, ensuring that they play a pivotal role in economic recovery efforts. As nations prioritize infrastructure investments to withstand future challenges, companies within this sector are likely to see significant growth. In summary, the significance of the mentioned infrastructure stock lies not only in its potential for capital appreciation and income generation for investors, but also in its alignment with broader economic trends aimed at creating sustainable and advanced infrastructure that supports future growth. 3. Which technology stocks are considered no-brainers to buy right now? Several technology stocks are currently considered no-brainers for investors looking to capitalize on the industry's significant growth trajectory. A few examples include well-established companies like Apple, Microsoft, and Alphabet, Google, which consistently demonstrate resilience and innovation in their respective spaces. Apple continues to innovate, with its ecosystem of products and services, including hardware, software, and subscription services, contributing to strong revenue streams. The company's commitment to privacy and security, along with the expansion of its services segment, positions it favorably for future growth. Microsoft, with its robust cloud computing platform, Azure, and a comprehensive suite of software solutions like Office 365, is also highly favored. The ongoing digital transformation across various sectors boosts demand for cloud services, and Microsoft is well positioned to exploit this trend. Alphabet, the parent company of Google, remains a leader in online advertising and digital services, with substantial investments in artificial intelligence and cloud computing. Its diverse revenue streams, including YouTube and Google Cloud, offer solid growth potential. Beyond these giants, emerging technology companies specializing in AI, semiconductor technology, and cybersecurity also present attractive investment opportunities. Companies like NVIDIA, which is a leader in graphics processing units and AI hardware, are also gaining traction due to growing demand in data centers and gaming. Overall, these technology stocks are not only foundational to the market but are also strategically positioned to benefit from ongoing advancements and changing consumer behaviors in the digital age. What is the outlook for climate solutions stocks in 2025? The outlook for climate solutions stocks in 2025 is generally optimistic, driven by a growing global emphasis on sustainability and decarbonization. As nations commit to ambitious net-zero emissions targets, investments in clean energy, electric vehicles, energy-efficient technologies, and sustainable agriculture are expected to surge. Analysts predict that climate-focused companies, particularly those involved in renewable energy, carbon capture, and sustainable finance, will see significant growth as these sectors receive increased funding and regulatory support. The Inflation Reduction Act and other international policies aimed at reducing carbon emissions are likely to boost innovation and investment in this space. Additionally, public sentiment is increasingly shifting towards sustainability, prompting consumers to support companies that prioritize environmental responsibility. This trend is creating a favorable environment for climate solutions providers. However, Challenges remain as the transition to a low-carbon economy could face hurdles such as regulatory uncertainties, technological limitations, and potential market volatility. Investors should also be mindful of the potential for shorter-term fluctuations in stock prices due to market dynamics and geopolitical factors. Overall, as the global economy moves towards sustainability, investors in climate solutions stocks may find substantial opportunities, particularly for companies that are well-positioned to adapt to and lead in this transformative period. Why is Bernstein skeptical about Uber's appeal on the Food Panda case? Bernstein's skepticism about Uber's ability to successfully appeal the decision regarding its Food Panda subsidiary stems from several key considerations in the ongoing legal landscape. The case involves complex regulatory frameworks and consumer rights issues that have raised significant scrutiny in many jurisdictions. Bernstein analysts highlight that the legal precedents set in this sector often favor regulatory bodies, especially regarding consumer protection, labor rights, and competition regulations. Uber's previous attempts to navigate regulatory challenges have met with mixed results, suggesting a trend that may not favor their every move. The legal arguments against Uber's operational practices within food delivery services reflect broader concerns about fair pricing, worker classification, and market competition. Additionally, the legal environment surrounding gig economy platforms is continually evolving, with increased advocacy for stricter regulations to protect workers and consumers. Bernstein expresses concerns that the courts may uphold existing rulings that challenge Uber's business model in Foodpanda, particularly in light of growing societal demands for accountability in the gig economy. As the situation develops, Bernstein's skeptical outlook indicates that while appeals can yield unexpected results, the structural issues at play might make it difficult for Uber to overturn existing rulings without significant changes in its operational framework or regulatory landscape. What is the positive impact of New Mexico's DPP program approval on Ardent Health? The approval of New Mexico's Direct Provider Payment (DPP) program is poised to have a favorable impact on Ardent Health Services, a key player in the state's healthcare system. This program aims to enhance financial stability for hospitals and healthcare providers by ensuring timely payments for services rendered to Medicaid patients. By streamlining reimbursement processes, the DPP program addresses a critical funding challenge faced by healthcare providers, especially in rural and underserved areas. For Ardent Health, this approval translates into improved revenue predictability and stability, allowing for better financial planning and resource allocation. Increased cash flow will enable the company to invest in necessary infrastructure, technology, and staff, ultimately enhancing the quality of care provided to patients. The DPP program also prioritizes access to healthcare services, which aligns with Ardent's commitment to serving diverse communities across New Mexico. Moreover, as a result of enhanced funding, Ardent Health may expand its services, undertake new initiatives, and implement innovative care models that reflect community needs. This proactive approach can lead to improved health outcomes for patients in the region. Overall, the approval of the DPP program represents a significant step towards strengthening the healthcare landscape in New Mexico, with positive implications for both providers and patients, particularly benefiting Ardent Health significantly. If you find this video helpful, please like, follow, subscribe, and share it with your friends and family. At L-Impact Solutions, we offer business consultation and growth strategy services to help you scale financially. Visit our website to book an appointment. The link is in the channel bio. Take care. Goodbye.